Hello guys, good afternoon. Today we're going to be doing a quick review of Thursday 11th price action basically on euro dollar. And it was a complicated day in a way that could have been a bit better. Certain opportunities that could have been taken. Not really not many clear opportunities overall, but we'll discuss about it in a minute. Or well, not in a minute, but now. So session opened around what here, and through session open we didn't really have much, to be fully honest. We had news today, right? And if I remember correctly, moved higher for a bit. It really didn't do much. And as you can see before that, we have phase one going against the trend, or what we believed was the trend, will do all of this, and the entire week was bullish overall, right? So it trades against the trend, and as you can see here, we had somewhat of a trend line that was being respected over and over like that. And price here aggressively goes lower, breaking all of that, which means that there are going to be sell limits here, where sell stops below the trend line, and potentially buy limits up here, right, with the stop loss God knows where. Thing is that there was a lot of liquidity thanks to this, and what I said through the Telegram is that due to this, we could see displacement higher that will generate fair value gaps to then try and look for those entries in the lower time frames, right? Also, at this time, I was expecting price to maybe sell side liquidity, buy side liquidity, potential continuation lower, but as you can see, we never really got any kind of fair value gap to go lower, neither here nor here, and this is actually the first one that we got from the New York Open and ahead, of course, because we did have this one. But here's the thing, right? Why would we give it more importance to this fair value gap up here comparing to this one, this here? This one just swept sell side liquidity. So for a fair value gap to be a little bit better, or I don't know if a little bit better, but valid entirely, it has to sweep liquidity and then create displacement on the exact opposite direction. As an example, on this fair value gap, we have a little bit of buy side liquidity swept, aggressive move lower, generates that fair value gap that is, well, not even mitigated later on, and then that trend is just completely respected, right? Not completely, but you know what I mean. And here, it just swept sell side liquidity, so ideally we're not going to see price going lower, and if it does, well, we can take advantage of it, but ideally, or most of the times, we're not going to see that going actually lower. So sell side run, buy side run, retracement, mitigation of fair value gaps in the 5, continuation of the trend up to a certain point that we'll talk about now. So what was I expecting for this session? Honestly, not much. My problem with a session like this is this: when anything or everything that happens before the New York kill zone is too aggressive, or there's a lot of move going on before New York opens, or before even the New York kill zone opens or starts, it's a bit complicated because it tends to cause a complicated scenario through the kill zone, right? Such as the in my experience, New York kill zone, when London or pre-New York have been very aggressive, it either just ranges, goes entirely against the direction, or in certain cases, in certain occasions, it just follows what trend was set by this aggressive move that we had before it, right? And today we kind of got both, or all three of them together, because when going higher, as you can see here, we did have, as an example, the opportunity to buy from here. I was trying to buy from here, as I mentioned on the Telegram, and price never really retraced into that. Then goes higher, generates another fair value gap, which generates a 1 minute fair value gap, in my opinion, pretty high up, so I wasn't that interested. And that is actually respected for a bit, then completely fails. If the stop loss would have been down on this low, or if the trade would have been taken with the 5 minute fair value gap stop loss down here, sure, that would have been a good trade. But the thing is that on that, the peak of this trade would have been around 1 hour. Around 1 hour, if lucky. So overall, not the greatest opportunity, to be fully honest, but the one that I really did like was this one, right? This one, because it goes a bit deeper, right? Getting maybe in the 50% of this, yeah, definitely in the 50% of this. Aggressive move higher, so we have run on sell side liquidity, market shift, fair value gaps in the 1 minute. And the only thing that I didn't really like about this one was the fact that the fair value gap was pretty high up. I preferred to see it in the first 3 candles, and this one got all the way up to the 4th, in my opinion. So it wasn't that attractive, but at the end of the day, it was a much better stop loss than having it all the way down there, right? I think to the peak we had around 2R. So begins well. This is a trade that I actually took, and completely fails, right? Completely fails, ranges a bit, and fails. Then we don't really get a fair value gap till here, which completely fails and is too high up, so we're not going to be trading that. And that's actually when the market shift happens, or the change in direction happens. So as an example today, we did get an impulse, but not much. We didn't get much of an impulse today, because if we would have had this, as an example, if this would have happened through London, and then New York opens, then this move here, aggressive as it was, could have happened here, right? Could have been this entire price action. Let me remember. Let me see if I can use this. No, I always get it wrong, with which one it was. So we could have had something like this through London, right? And then this could have happened through New York, which is the, of course, ideal scenario, right? Just follow me with that, basically. You have a range, then the continuation of the trend, right? Or the continuation of the direction that was expected, per se, right? I would have not expected a bullish day because there's not much liquidity to take from this side. I wasn't really interested in the sell side either, but as an example, pre-New York did give us this tiny bit of a run on liquidity, displacement lower, and that is respected for a bit. But all that did really was to create more liquidity on the trend line and then just take it, and it's just continue to go higher. But through phase 1, as an example, something that I do wait for is phase 1 going against the trend or running on sell side, buy side liquidity, depending on what I'm looking for. So we did kind of get that through phase 1, and phase 2 goes against the trend, mitigates phase 1 fair value gap, and just continues higher. And again, I tried to take that buy, price just didn't trigger me in. Then we had those 2 buys that could have been taken, that would have ended up in a loss. Then we have this impulse, right? And at this point, we're really high up, right? That's the problem in some cases, when you kind of want to grab this trade down here, right? Maybe this one. And the reason why I say it, because when we're trying to trade off of a 5-minute or 15-minute fair value gap, let's suppose we have liquidity here. Price takes that liquidity, right? Displacement, and the entry, if you do everything correctly, and the market, of course, gives you the opportunity to do that, we're taking this one, right? We're taking a trade or a lower time frame entry inside this fair value gap of 5 or 15, right? Again. And then we're right in with the move. And then, of course, we are going to have other fair value gaps that could cause reactions or entries. But the problem with that is that we are taking an entry that, as an example, could be used as liquidity to then go to a lower area, or to just completely go much lower and then continue higher, right? That's my problem with buying too high or selling too low, right? We always want to see somewhat of a retracement, or at least a low or a high being swept, before actually considering taking an entry on a fair value gap. So this fair value gap is created. As you can see, I was actually happy, or I was excited to see these highs taken. I wanted to see price going above that, mitigating the fair value gap, displacement, and whatever time this one happened, I would have definitely taken it, because it was so much liquidity built up here. The fair value gap is lovely, cost the market shift and everything. So for me, that was really a good entry. A really good entry if, of course, price would have come up to that, which it didn't, so nothing for me to do. Another 5-minute fair value gap here, which I was looking for an entry at first, but then it started to like range, and I was 11, so I said no. And basically immediately after, we do get this tiny bit of an entry, which is what I had drawn there. And what I was aiming for was this, which would have been lovely. I would have taken a good amount of time and would have had to keep my stop loss on where it's supposed to be, right? Not move it to break even or anything like that. And that would have been for R, if I remember correctly, 4.20, no, 4.3. Yeah, that would have been it. And this would have been difficult, right? Because we moved so low, all the way down to 3.98, and price then completely retraces up to that point, and well, then continues with the trend. Also, if you check the 5, we even have another fair value gap. The price, of course, there mitigates and immediately creates this lovely entry that we could have taken. Immediately after that, there's another one. Although this one, well, the high is actually respected because the stop was supposedly should have been above this high. As you can see, it's actually respected through the rest of this tiny bit of a range and then the continuation. I am not sure if this would have been a better entry. I don't think so. No, would have been pretty much worse or the same, and target would have been 3.17. So yeah, worse for sure. So why did I want to make a video about this? Thing is that Thursdays for me don't really make that much sense. Usually they tend to do exactly the opposite of what the week has been doing. So if the week is bullish, Thursday might be bearish, and vice versa with the bearish week and the bullish Thursday. And today I kind of got a little bit of both, a little bit of a range as well. They're very messy price action, to be fair. But overall, we did have somewhat of opportunities to go higher, which none of them worked, and some opportunities to go lower that some did work. So overall, today, you can see how the run on liquidity here, immediate displacement, this is respected, right? If we would have taken the 5-minute POI, or not POI, the 5-minute fair value gap, the peak of it would have been 2.57R, which is fine. What was that big? Well, it kind of mitigated that order block. In my opinion, this is just now equal highs for price to later take. I don't really see this going lower just at a double top or something like that at the up here. Maybe break structure to then just take that liquidity and then go lower. I have no idea. I don't really like doing those kind of analysis, but at the time, that's really what I would actually expect to see, this 2 highs taken as liquidity later on. Overall, it was a weird day because I was looking for buys mostly, and we never really got a clear opportunity. This would have been a loss, which we discussed. The previous one would have been a loss as well, just didn't really like it the way that it was created. And sell-wise, well, the problem is that the one entry that would have been fine happened pretty late, and then we had the other one here that was actually a much better entry in my opinion, just that it had also a pretty big stop loss. So what I wanted to point out too is this. Look at how clear it takes the liquidity, immediately displaces and generates that lower time frame, that higher time for fair value gap in the 5, which ideally, again, here as an example, price didn't really have to retrace that much to mitigate this fair value gap in the 1 minute, right? Maybe with this week, it could have just nicked it lower, right? Trigger the entry and continue higher. That would be a very lovely entry, right? Because this one would have given us a much better entry, right? I don't know if much better, but definitely better. And peak would have been 3.42. Of course, target today would have been an issue because I definitely would have gone above this high, right? Which was a little bit of a better target. And in this case, it would have been 3.94, right? Which would have been missed. Probably some partials taken it along the way, but nothing for us to really do today. The sells would have been complicated because sure, we do have the liquidity, the run and buy side liquidity and immediate displacement, but again, kind of going against the trend of the entire week, so would have been difficult. A interesting day, which in my opinion had a somewhat clear direction, but as you can see, the lower time frame entries just didn't work out. Could have taken 2 losses here, would have been missed on this one, no entries on this entire price action. And then on the sell side, we do get better entries. I mean, we actually get entries that worked out comparing to the buy side when we didn't get any of those. On this side, we did get 1 and potentially 2, right? So overall, a weird day. Just wanted to make a little bit of a resume because it was interesting for me seeing this trend line liquidity failing and immediately seeing that displacement. And if we look closely, it actually comes back lower and mitigates this fair value gap. The first fair value gap in 1 minute created after sweeping all of that liquidity, which is something that, as an example, maybe we could study. You know, maybe we could say maybe that's something that happens, right? As soon as a low or liquidity overall is taken, something like this happens. The 1 minute creates a fair value gap that is sooner or later mitigated and respected. And that would have been a peak of 77.62 R. That would have been a much more interesting scenario. But yeah, that's really all. I would just want to, again, quick resume, trying to, understand a bit. This also works for me because today, for me, I mean, I avoided trading completely due to this. When London, pre-New York, midnight are too aggressive, New York kill zone tends to be a bit bad to trade. So I just completely avoid the session unless there's something really clear happening, which in my opinion this was. Reason again why I did look for buys but just didn't work out. Right? So that is pretty much it for me. So I hope you had a nice session today, and hopefully we get something a little bit better tomorrow.